you ever trade the order book? And the question is, I'm working on a strategy for it. And what is the order book? Let me show you real quick. The order book looks at all the bids and offers. You see here, over here is 10 levels of bids, and over here is 10 offers. And do we see a pattern in that? There's no historical data for that, so it's hard to trade. I'm looking for a way to record that. I actually have a way, and it just takes some time to build a strategy based on that. And so taking another look, I do have an indicator, and what this market depth indicator does is it sums up the total of the offers and bids. And so you see the blue represents the bids, and the pink or red represents the offers. And then on this bottom one we have the ratio of bids to offers, and the blue represents the bids and the yellow represents the offers. I need to change that. I want to match the colors on this one. It's easy to change the colors, but we're looking at all 10 levels. You can adjust this indicator to look at 1, 2, 3, however many levels you want, and then try to trade from that. Now you see the FOMC meeting happened here at 1400, and you saw a huge dip in the order book size from about 1340, 140, 20 minutes before it started dropping. And so the market makers pulled out, there was less orders, and so not as many people trade until after the event. And so you see the dip, and then the news event came out, and then it picked back up. So you see some whipping in here, whipping around, maybe hardly even a 10-point range from here to here, and then maybe a 12-point range to there. So it's not a huge move in the market for a news event, but some volatility. So what happened to our strategies? Again, we traded tick pulse. I want to show you the results of that. So tick pulse is a strategy that was short today, short yesterday, had one winner, one loser yesterday. It was up 462.50 yesterday. Hit the profit target on the first trade and exited the second trade of the loss at the end of the day. Today, this trade, the FOMC minutes came out right here, or FOMC meeting announcement, no interest rates right here. And so the market initially went up a little bit, and then it went down, and we hit a profit target. And so, I mean, not a lot of effect on our trading system. In reality, there's normal amount of volatility, really. You see the movement in the market, not much different than before. And so we trade this system. We don't exit the trade right before the announcement unless we have a strategy to do so, unless we backtest and go and backtest all the FOMC meeting dates and times and any known events that we know in advance that we can also know in advance in the future. If we want to filter out those, you can build a database of dates and times to exit strategies in advance or not take trades during those time periods. So that's one answer to, do we trade during FOMC meetings or news events, and what happens to the order book? And there's some potential advantages that I see in the order book that I'll be testing and share with you. That indicator, I'll have it on my site as well soon.